Good afternoon and welcome back to Moneycontrol's live stream. You're tuned into Closing Bell with me, Lavisha Darad, and joining my colleague Yatin Mota. Well, Yatin, quite a choppy day, but not much to complain given how we fell yesterday. We managed to break the 3 day loss, and Sensex settled with about 400 points gain, and Nifty was also above that 24,800 mark as well. So we started flat. Then we saw a good recovery with Nifty topping that 24,950 mark. Then from 12:30 onwards, markets trimmed some of the gains and held steady with a 0.5% gains as well. But yes, overall broad-based buying was seen in the markets. Mid caps and small caps also did well. All the sectors were in the green, and in even the Nifty Defense Index, which saw profit booking last 2 days, was well up as well. Also, Nifty Pharma Index, that was the top sectoral performer of the day. Yeah, then while we were expecting the rebound to get sold into in today's market, but we managed to close in the green. So all in all, a very positive sentiment that came in the markets today.
Yes. Yes, clearly, Lavisha, and the more important part that we were discussing yesterday, the kind of fall that we saw yesterday was quite alarming and disappointing. But yes, markets have been, managing to stay above that, 24,700, 24,800 mark, and which decisively we did ahead of the expiry next week. There is volatility in the markets, but given the fact that a lot of mid caps are rebounding, a lot of frontline stocks are rebounding, clearly shows that market is not ready to come down. At a particular price, domestic institutional funds, insurance companies are lapping up shares, despite the fact that FIs have been sellers in the market for the past one or two trading sessions.
That's right. Okay. All right. Let's take a look at some of the top gainers and losers on the Nifty 50. Well, pharma stocks did well, and we can see the same on the Nifty 50 charts. Cipla and Pharma with about a percent gains or so. Bharat Electronics topping the charts with about 5.2% gains, given that the company did give out a strong guidance for FY26. We'll discuss up the stock in detail also. The stock did notch a record high in today's trading session as well. Other than that, Tata Steel, HDFC Life, Bajaj Finserv, all of them were in the gainers list. On the contrary, IndusInd Bank, some nervousness can be seen. Q4 results are expected today. The lender is expected to tip into losses, but we'll watch out on the management's commentary about the new management, what the outlook is going to be ahead, and what the interest losses and, of course, the derivatives discrepancies is going to take a hit on the lender. So we'll watch out on all those numbers as well. Other than that, we can see JSW Steel, Kotak Mahindra, Coal India coming from yesterday's sharp up move. We can see a little bit of a cool off today with about 0.6% cut. Power Grid also seeing a cut of about 0.5% or so. So yes, that was from the large cap space. But yes, mid cap and small caps after 1 day of pause again once again bounced back in the trade today. Yatin, why don't you take us through the top gainers and movers?
Yeah. The advanced decline ratio on the mid cap index or the entire market was broadly 2:1. Both mid cap indices gained nearly 0.5% each. And if you look at the gainers, we had stocks like Trident, JK Tyre, Go Digit, Glaxo Pharma, doing well in trade. In fact, JK Tyre, despite the fact that year-on-year numbers were quite weak, that stock managed to pull 13% higher, with probably costs looking lower with crude price coming down, should help margin rebound. We also have stocks like BEL Solar Industries from the defense pack, which did well, 5% up for both of these stocks, especially with the fact that both of the stocks are in the future and option segment. We also had stocks like Engineers India, BDL, GRSC, IDBI Bank clearly moving in trade. So the PSU stocks from the defense space, from the banking space, as well as in the railway space did well. What was not doing well is Dixon Technologies. Numbers were good, but the outlook for margins and the valuations look stretched according to brokerages. That stock was down 5%. Aster DM, Radico, as well as Signature Real Estate were the other stocks which saw cuts of nearly 4 to 5%.
That's right. But yes, let's decode some of the stocks that were in focus today. Like Yatin was talking about Dixon Tech as well. The stock did slip in today's trading session despite reporting quite a strong March quarter. It did see the company reported a fourfold jump in net profit, largely due to one-time gain of selling shares in AIL Dixon. And the revenue also surged by about 121% year on year, and operating profit tripled in the fourth quarter. Now, why the stock saw pressure is because the brokerages are concerned about its rich valuations, and with the PLI scheme ending next year, they see limited upside or any re-rating triggers from here on for the counter. JM Financial, for instance, they have downgraded the stock to about hold from a buy and have even cut the target price. Now, the brokerage cited three main reasons behind their downgrade. First is your delay in their Vivo production and display sub-assemblies, which second is the potential increase in competition as the mobile linked PLI incentive scheme will end next year, and then it will become a level playing field for all the players as well. And third is the stock's rich valuation, which offers little room for upside going ahead. Yeah, then if you look from the brokerages, Morgan Stanley shared a lowest target price on the counter of about 86.96 rupees, which means a 40% downside in the counter. So quite a negative which is coming in on Dixon Technologies.
Yeah. Yes, and we also have Morgan Stanley, Lavisha, which has a target of nearly half the current market price for Dixon Technologies. If I remember correctly, that target is less than $9,000. Obviously,
Yes.
valuation. The only issue that brokerages have on the stock is the valuations, because on a forward basis, probably you look at the stock and it will be 80 to 100 PE ratio, depending on what earnings assumption that you have. But we also have stocks. And brokers like Jeffries, which believe that despite the higher valuations, the momentum of the growth is quite strong. So yes, mixed views from the brokerages with equal number of probable sells and buys among the large ones.
Yes, that's right. Now, let's take another stock in focus. That was your Bharat Electronics, one of the top nifty movers, 5% gains coming in for the counter. And the stock did record touch a lifetime high today in trading session also. We saw that the brokerages raised the target price on the counter on the management's strong guidance for FY26. Basically, the management expects revenue growth of 15% this year and EBITDA margins growth of about 17%. And what the brokerages took that as a very positive thing. JP Morgan, for instance, they shared an overweight rating on the counter, and they shared a highest target price of about 445 rupees per share, which implies another 17% upside from today's high. What JP Morgan believes is that the medium term growth outlook for the company remains quite strong given their equipment and systems which were supplied during the India Pakistan conflict performed quite well. So that bolsters their order book outlook as well and reaffirms the confidence on the company. Morgan Stanley also retained its overweight rating on the stock and said that the company is in better control of its supply chain in comparison to HAL. Yet in strong management commentary, brokerages giving a thumbs up, despite the street's concern about valuations on the defense pack. So BEL definitely a thumbs up going ahead.
Yes, a thumbs up. And yesterday the management gave a conservative growth guidance of 15% on revenues, but the guidance on margins, which was earlier 23 to 25%, that rose to 27%. In fact, in the Q4, we had the EBITDA margins crossing 30%. And also, if you look at the order inflow guidance, that was more than 27,000 crores for FY26, X of QRSM, which is the quick reaction surface to air missile, which is used to repel enemy air attacks and drone attacks, which work really well with the armed forces. So I think with the order pipeline strong, with anticipation of the QRSAM, which is the quick reaction SAM missile orders, which is probably in excess of 40,000 crores if BEL were to win that order. The order pipeline as well as the margin outlook looks quite strong, and hence after the consolidation yesterday post the conference call, today the stock moved nearly 5% in trade.
That's right. Let's take another stock in focus. Now, this pack was also buzzing in day. That was your tire stocks. We did see that JK Tires, ended with about 12% gains or so. MRF also did well with about 1% gains. This came definitely on the back of JK Tires' strong sequential performance, which brought in the cheer in the remainder of the stocks as well. For the Q4, however, JK Tires' profit rose about 79%. While total income rose modestly by 2% on a sequential basis. And operating performance also fared quite better. Earlier, we also saw that C8 and MRF also posted quite a good March quarter performance. And even C8 shared a double-digit growth guidance going ahead. And MRF also expects that the cooling raw material prices is expected to aid margins in the upcoming financial year also. Yeah, then, managements are quite optimistic. And now with crude oil prices and rubber prices cooling off, tire stocks could remain in favor going ahead.
Absolutely. And, despite the fact that JK Tire posted a weak number, we had C8 and Apollo Tires doing well in terms of the margin outlook. And as you mentioned, weak rubber prices from the recent highs that they made, and with crude, moving lower, which is a large portion of their cost because a lot of synthetic rubber comes in from crude derivatives. I think most of these tire companies would benefit in terms of margins for the coming quarters.
That's right. And yeah, then what is the next stock on your counter?
Yeah. Yeah, so the stock that I am looking at is United Spirits. Now we have seen the alcohol stocks do really very well in terms of quarter four numbers, and now if you look at United Spirits, the Andhra Pradesh volumes are back, which has helped the company on an overall basis to scale better results for Q4. In fact, Nuvama has a buy call on United Spirits with a target of 1820. Obviously, today the stock was range bound, but brokerages do expect that the sales volume growth, and especially after the UK trade deal, the overall pricing would be much attractive to consumer when it comes to premium alcohol. In fact, the P&A volumes for the company, which is the premium segment, grew nearly 9%. And also because of the cost control measures, the margins came in much better than expectations. In fact, if you look at the ad and promotional expenses, that were down nearly 3%, and other income was down 25%. Despite that, we had a good operating performance and a profit performance from United Spirits versus the market expectations.
That's right. And of course, because of the UK FTA agreement, we could see further acceleration of the volumes and, of course, the growth going ahead for the
Yes.
alcohol stocks as well. But yes, all right, with that, we've come to an end of this edition of Closing Bell. We'll be watching out for indecent numbers, which could be trickling in just a few couple of minutes. And we'll watch out for the management's commentary as well. But for now, it's a wrap from Yatan and me, and thank you for watching.